Should we even be talking about the Kenyan markets, the NSE? It's just so much bearish sentiment over the last few weeks, and we're told it will continue till about March.
We hope the earnings season will try and make the market pick up a bit. But if we go up to March and we're still in this bear run, because we expect most of the results to come and start kicking in next week. Most of the banking sector results to come in next week. BOC this Friday, Mr. February's next week, Barclays, Equity Bank, NIC Bank. If we go through next week and we're still in the same trade where volumes are still low and the market is still going down, then clearly the earnings season will not be the start that we need to kickstart the market.
What do you think is going to be needed to kickstart the market, despite and irrespective of what the results may indicate, just to get Kenya back to technical levels, pricing that's a little bit reinvigorated? What's going to need doing?
I think that the two main factors, one is at least the Egyptian issue, the protests have died down and there's some sort of headway making way that way. That should at least give foreign investors an enticement to start coming back into emerging market equity markets, especially African markets. Then also, I believe if this political impasse on the constitutional nominations of the Chief Justice, Budget Controller, and all those other positions also passes, reduces the political risk that the country is facing, then naturally we're supposed to see investors coming back in, especially foreign investors.
Talking about results coming through, what are your expectations broadly? We've just heard that the banks should be seeing profit increases of about 43% on average. Are you expecting a very good picture for the banks, and what about the other sectors?
Going by the third quarter results that most companies actually did announce, we expect results to be good. Generally, nearly every company did well last year. If it was not for maybe their own internal insufficiencies. But the banking sector should do well. Yes, an average is of 30–40%. But the main banks to look at is your young banks that are still coming up, or banks that are turning around the corner, your National Bank, your Cooperative Bank, your Equity Bank, and maybe even your Diamond Trust Bank. The other sectors we're looking at is definitely construction. We expect construction sector results to also to be very good. Same as the media side, your Standard Group, your Nation Media Group, your Scan Group. Telecoms might be affected a bit, as much of them have been, Safaricom, I think we'll be announcing third quarter results sometime in March. Full year results actually sometime in March. So yes, I think banking sector, your construction sector will be the best place to place a bet.
Okay, asset allocations then within this context for anybody who's looking forward to re-entering the market.
I think the issue that we currently have is that people already taken positions based on the outlook of first quarter. Market should go up generally because of the final year results announcement that happened during this quarter. And I think this bearish period and this downturn and all the other events that have affected the market caught nearly everyone off guard. So most people are currently, I think, are actually fully invested and are now basically hoping for the best. For those who had the cash reserve, yes, they can either cost average on the positions they're holding to try and reduce their cost price to benefit from a rally if the market does rally. For people that are in fixed income, they're already in fixed income. People are buying their 30-year bonds, people are buying the 15-year bond, and the like. So I think people are actually fully invested. It's a matter of averaging and the timing for selling.
Let's look at macroeconomic variables here, Reginald. News reports of a 3-year wage freeze for public sector workers. This is one of the conditions being set by the IMF for a credit facility to the Kenyan government. With inflationary pressure starting to creep into the economy, what is the likely impact of this sort of wage freeze?
If the wage freeze actually takes place, it will be a bit of a big impact on the economy, because if you look at the civil service, the civil sector of the economy, it comprises most of the working class. It comprises most of the employment figure of the nation. And once you freeze their wages and inflation does go up because of external pressures, you will find your critical demand in the economy. You reduce consumer demand, which will affect, also make manufacturers reduce their supply or send their supply elsewhere. So it will have those ripple effects in the economy, which I really don't think that they will freeze the wages for 3 years, especially for civil service.
Another condition that's being set here is for the CBK to maintain a position of so-called fiscal prudence, and that's basically keeping inflation within the target range of 5%. We do know that recently the CBK was criticized for its rate decision. When people are saying inflationary concerns coming in, it's probably time to start thinking about increasing interest rates a little bit more.
It's a bit difficult to meet that condition, as you said, because of inflationary pressures, which most of them are even exogenous. They're not inside the country, so the central bank can't really control them. I'll give an example of fuel prices, which have gone above 100 a barrel. That will affect fuel prices in the country. Automatically, that leads into the rise of energy prices, which filters into everything else that happens in the economy. With the drought also, so this area of energy will really affect a lot of things. So if inflation might keep on going up above the 5.4%, which currently it is at. But knowing the Kenyan statisticians, they managed to change the basket, they managed to change the calculation. I don't know what they'll come up with now.